Welcome to Dr. Fred Markets. This is not financial advice. Every day, the world of finance, crypto, and artificial intelligence moves fast, really fast, and staying informed is the only way to stay ahead. That's exactly what we do here, together. Let's get into today's video.
The moon is a better investor than your financial advisor. Bitcoin is up about 1% today. Ethereum is green, yet everyone's staring at a delayed OpenAI IPO and a losing stock market, like that's where the real signal lives. Traders freak out as the Dow and Nasdaq slip, but they're missing the free signal printed in the sky, the strawberry moon hitting at the same time as a macro risk cluster and crypto liquidity reset. While you doomscroll headlines about Trump advisors and fired baseball managers, the oldest calendar humanity ever used is front-running your next entry point. Here's the first hard number. Over the last few years, crypto's biggest liquidations and reversal days have clustered around options expiries and funding resets, which often sync with end-of-month and quarter flows. Funds rebalance, degens get wiped. Then the market breathes. Today, Bitcoin's sitting around 60,000 with a tiny green candle screams indecision, not euphoria. That's where professionals hunt. Second signal. The strawberry moon isn't astrology, it's a timing device. Every full moon is a fixed point in the month. Farmers used it to schedule labor because weather and harvest windows meant survival. Now your harvest is market liquidity. End-month full moon periods line up with rent payments, credit card cycles, and institutional rebalancing, money sloshing from checking accounts and bond funds into or out of risk assets. That flow doesn't care about your horoscope, it cares about dates. Third signal. Retail still uses Amazon Prime Day as their calendar. You just watched everyone binge on fake discounts right before their bills hit, while the indices rolled over and tech names flinched on an OpenAI IPO rumor. That's not just shopping. That's millions of people yanking cash forward, then tightening up right after. A perfect setup for a short, brutal liquidity vacuum. So what does a full moon have to do with that? Here's the mechanism nobody taught you. Humans anchored time with the moon for tens of thousands of years. Plant on this moon, harvest on that moon, sail on this moon, don't leave port on that one. Finance took that same rhythm and slapped different words on it. Options expiry, month-end rebalance, rent week, payroll week. It's the same human cash flow heartbeat, just wrapped in Bloomberg jargon. Crypto is the purest expression of that heartbeat because it trades 24/7 and has no adult supervision. When liquidity tightens on the real-world side, people paying rent, companies rolling credit, funds rebalancing, you see the stress immediately in perp funding, spreads, and volatility. Think of the calendar like gravity on a tide.
Does what you just heard make you want to dig deeper? Good, because that curiosity is exactly what brought you here, and the second part is going to take it further. Let's go.
The moon moves, the ocean follows. Rent hits, credit payments clear, rebalances fire. Your little altcoin gets slapped. Here's the one concrete thing nobody told you. You can build a dumb, mechanical timing framework using nothing but the full moon and two numbers from crypto derivatives. Rule 1. Don't ape size right before the tide goes out. Look at a full moon date. Then look 3 days before and 3 days after. In that 7-day window, pull up Bitcoin perp funding rates and open interest. When funding is high and rising into that window and OI is stacked, that's crowded leverage. Tides at the top of the seawall. Mean reversion hurts. Rule 2. Hunt entries when funding resets from positive to neutral or slightly negative inside that same window, while price is flat or slightly red. That's not the universe speaking. That's forced deleveraging and bill paying knocking idiots out of their positions. You're not predicting. You're waiting for other people's calendar to clear them off the board. Rule 3. Size your boredom, not your excitement. When volatility is dead, headlines are garbage and everyone's arguing about politics and baseball managers instead of funding rates and liquidity, that's your moment. You buy less than you want with money you don't need on a schedule you can obey. The punchline. The moon is not magic. Your bills are. Your employer's payroll is. Your landlord's mortgage is. They all hit on a rhythm that lines up with obvious calendar points, and if you ignore that, you trade like a drunk tourist swimming at high tide. So here's your move, not financial advice, just the truth. 1. Print a simple calendar with full moons and month ends marked for the next 12 months. No apps. Paper. 2. For each marked week, set an alarm to check only 3 things: Bitcoin price trend, perp funding, and open interest. No news, no vibes, just those 3. 3. Commit to only entering new medium-term positions inside those windows after a funding reset, never when everyone on Twitter is high-fiving green candles. You will not become a lunar wizard. You will just stop being the guy buying max leverage right before bills, rebalances, and liquidations slam the door. The moon doesn't care if you're broke. Markets don't care if you're late. But if you respect the rhythm, the cash flow tide, you'll stop drowning every month and start surfing tiny edges the herd doesn't even notice. This is not financial advice. It's a calendar. Use it. This is not financial advice. If you enjoyed this video, please subscribe to the channel and check the links in the first comment below.
That's it for today on Dr. Fred Markets. I hope this gave you clarity and a new perspective. Remember, this is not financial advice. Always do your own research. If you found this useful, subscribe. It's free and it helps the channel grow. Find me on the blog at drfredmarkets.com and join the newsletter via the link in bio. I'm Dr. Fred Markets. See you in the next one.